Why has it gotten so much more expensive to insure places there? Why has the risk gone up? Why is it more likely to see this? Is it management on the ground of what's happening there? Is it explain to me, what's the risk profile that you look at? Because you guys are better at this than anybody.
It's a combination of factors, right? You've got more expensive real estate. You have more real estate. You have more real estate built, into the forest zones. And then there are all manner of conditions and situations in California that make that even more challenging. You add to that the inflation that's covered that we've had in the last few years, where the cost of cars and homes to both repair and buy have gone up. So the cost of the built environment has gone up, and the risk associated from things like weather events we're seeing today have gone up. And our ability to bring all those into appropriate rate in California is just very challenging.
What about reinsurance, Juan? I hear everyone complaining about that it's the reinsurance fault, that regular insurance companies can't get reinsurance.
No, look, I think Wayne's done a nice job explaining this. I mean, the reality is the cost of goods sold is dramatically increasing, right? So in addition to the heightened risk environment that we're in right now, and frankly, it's a cycle that started back in 2017 with increased tornadic activity, catastrophe activity, hurricanes, et cetera, and costs are up. The inflation that really surged after 2021 and the pandemic is really part of what's happening here. But the other aspect of it, too, has to do with building and zoning codes, et cetera. Ultimately, it's about having a viable insurance market in a state like California. And in order for companies to deploy capacity, reinsurance companies, insurance companies to deploy capacity in a place like California.
This isn't tornadoes or hurricanes in California we're talking about. There wasn't they had the wettest 2 years in history.
But that caused
in California.
All this growth. It caused
all the growth. But the Santa Anas aren't new. None of this is new in California, other than it's in the Palisades, where every house costs, or a lot of the houses are multi-million dollars.
But what happened in California is that you had a commissioner who's elected and under pressure and artificially kept the rates low for a long time. And we just heard from Allstate's CEO at a conference at Goldman Sachs in December saying, look, we're happy to operate where we can do so as a business, but where we can't, and he called out California and Florida, we're not going to. And so that in particular had to change. California recognized it was at a crisis point. They came up with this sustainable insurance plan, and they've met the metrics that they had set out for the end of 2024. A bigger picture for this, though, is now you have large swaths of L.A. that are just decimated. And one, will reinsurance kick in for an event like this? Would you expect to see reinsurance policies paying? Two, if those people go in and the FAIR plan has been wiped out, is there going to be insurance available for people who want to rebuild?
Yeah, Contessa, I think for an event of this magnitude, and you cited some of the numbers at the beginning of this segment, you're looking at industry losses upwards of about $13 billion, and that's an early estimate, and economic loss upward of $50 billion. Look, the job of the reinsurance industry and the insurance industry ultimately is to get communities back on their feet, get individuals back on their feet. So, yes, I would absolutely expect that there will be reinsurance coverage available for the companies that are on the ground right now trying to help people in the state of California.
And Juan, you're going to take over the reins at USAA. So these million customers in California are going to be yours to deal with. You're also dealing with an incoming administration that has proposed tariffs on Canada and Mexico of 25%. We get an awful lot of building materials from Canada and Mexico that would go into this. What's your expectation of the way we could see this play out for Southern California? And by the way, Florida, which is still trying to get back on its feet post 2 hurricanes late in the last season.
Yeah, so a couple of observations, and I think Wayne probably made the most important one, which is USAA is a different type of company, right? So we have not pulled back with our members in California, particularly active duty members. So for us, that commitment to provide world-class service to them absolutely remains. And that is the focus for our claims operation as they're being deployed right now to deal with these kinds of issues. Regarding the inflationary pressures, yeah, you could potentially see inflationary pressures from some of the tariffs that are being talked about. That is, unless within the United States we have the capacity from other manufacturing entities, companies that over time will fill in the supply for some of that. But this is part of the reason why rates have increased for the industry over the past number of years. The reality is there has been inflation in the system, and companies have to charge adequate rates for the exposure that they take.
Wayne, let me ask you, do you think that this situation, the wildfires right now, will bankrupt the FAIR Plan, the insurer of last resort in California? And if so, do insurers that operate in California run the risk of being saddled with whatever losses aren't covered by the state?
Look, Becky, I think it's early to call, what may happen to the FAIR Plan. This is going to be a significant event. They've picked up tremendous exposure. We're going to have to monitor and see. And I think you, at the opening of your segment, said it really well. There will be an impact to insurers who are in the market, should there be strain or, bigger challenges for the FAIR Plan. But the bigger issue here is getting California to an insurance market that is healthy and reasonable, so that we can take care of customers, members for us in California, continue to make an appropriate profit so that we can stay in business and provide what is an extremely valuable service to everyone in America. And that's the real question that's been in front of California really for the last 10 plus years. This, I think, is going to bring it to the forefront.
Which means what, though? Which means the ability to raise rates that you charge homeowners and businesses?
We are going to have to raise rates. I will tell you, we stay in California. We don't make money in the homeowners business in California, and we're working really hard to trim in every way possible. But if you can't get adequate rate to cover the risk, that creates a challenge that's untenable in the long run. And this may be the event that causes more discussion and more change. Meaning
more discussion and more change. If you can't get higher rates that will make sure that you're not losing money there, that you will eventually pull out of the state altogether?
Well, here's what I would tell you about USAA. Juan said it, I said it. We're going to work very hard to continue to serve all of our military members. That's our job. That's our mission. Over the long term, we have to create a more healthy market in California.
Wayne, Juan, I want to thank you both very much for joining us this morning. And Contessa, thank you for bringing this to us.
Thank you.
Okay, we got a lot more coming up.
Thank you very much.